What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, Amazon, Netflix, NVDA, and Apple. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where we're going to enter, where we're going to take profits, or where we're going to cut losses if necessary. So let's go ahead and get started by first talking about SPY on the daily candles, where we can see that SPY enjoyed a very strong upside move on Friday after NVIDIA's massive upside rally drove the entire market up. So with artificial intelligence being the main focus for investors right now, we are starting to see the attention shift away from the scary parts of the market, from the debt ceiling, from everything that is in between, like the war in Ukraine. And now the market is excited about something new, something that could potentially drive the next growth cycle, which is artificial intelligence. So needless to say, NVIDIA's massive upside move this last week was extremely impressive, and it leaked into other artificial intelligence companies. So companies like AMD, companies like AI, all jumped up and they enjoyed very strong upside volume, indicating that we can potentially continue this upside move going into the second half of the year. So now let's move back to SPY and talk about SPY's short-term potential and where it stands on the overall charts. So SPY being back above all of its healthy moving averages for most of 2023 is a good indication that bulls have been in charge for most of the year, and now they are back above the 10 and 20-day moving averages. So you can see that the 10 and 20-day moving averages have somewhat acted as a major support for us over the last 3 to 4 months, and now we are strongly back above the 10-day moving average. You can see that every time that sellers dipped below that level, buyers quickly came back and bought us back up to close us just above 420 last week, which is a great number to achieve because 420 is a psychological resistance for most traders. So now that we're back above 420, we're looking for a continuation back up. And here are the short-term targets that we're looking at. First of all, we need SPY to open up the week to open above 421.20 or to break above that point. Now, upon breakout, we may not be able to make it far, and that's because last week's rally on Friday was nearly vertical and it did not see a lot of profit taking. So at some point this week, we are expecting a large pullback, but if the pullback does not come around and SPY manages to stay above 421.20, then we are looking for the next price target of around 424 to 425. So remember what happened with the NVIDIA short sellers here. So NVIDIA short sellers lost more than $2 billion on this jump on earnings, which means that short sellers and other stocks who are holding short positions and betting against companies are going to be more scared right now because of that move up. They will be scared that this will cause a domino effect in the market. Therefore, on Friday, we saw companies like Tesla, which is a usual suspect for short sellers, massively rally upside, and this could just be the start of short sellers letting go of their positions and buyers coming in, causing a short squeeze up. Now the short squeeze on SPY has not happened yet, but it is looking like we are inching towards that. The biggest hinder in the markets lately has been the debt ceiling. However, that is expected to be resolved soon, which is likely going to cause a large upside rally. But keep in mind that we have to think about both sides. So say the rally fails and SPY moves back down, and say it breaks back below the 413.60 mark, then it is likely going to turn back very bearish. And the reason why is because if we pay attention to what happened between the 3rd through the 17th of May, it was a major consolidation and buyers and sellers were both fighting to get to their way. Eventually, the buyers got their way and you can see that they moved us back up. And so if we dip back below that level one more time, then the buyers are probably going to be very tired and the sellers are going to take over, and we may see us drop back to 408.70. However, overall, we are still leaning on the bullish side, and since we closed Friday back above 420, we are confident that we are going to continue this move up, especially with the debt ceiling now being resolved. So now let's move on to our watch list, starting with Apple, which just recently enjoyed a new 52-week high right around 176 to 177. Now, many other stocks on the market have formed new yearly highs, including Meta, including Microsoft. So Apple is surely to follow since it is one of America's favorite companies to invest, and it's one of the best companies to invest in out there. So with that being said, Apple has rallied all year, therefore its breakout has lagged behind the market. So while Apple rallied ahead of the market for most of the year, now that the rest of the market is catching up, we can see that Apple is taking some time to cool down. But Thursdays and Fridays volume indicate that buyers are very interested, but they are looking for some breakouts above certain levels. So the first level to focus on for Apple is going to be 176.45. If the stock can break above that level, then we are going to move to a price target of around 178 to 179. And if you haven't watched our videos before, when we are looking for breakouts above resistance points, we will wait for the breakout and we will wait for that confirmation, and our stop loss will be placed just below the resistance in the case that the breakout fails. So if the breakout stays above 176.45, we start taking our profits right around 178 to 178.50. Now Apple technically right now is fully bullish, and it is going to stay as bullish as possible as long as it holds the 172.30 level. So if you see the stock pull back to 172.30 to start off the week and it reverses back up, then you can enter the stock and use a stop loss just below 172.30, and 176.45 will become your first price target. But if the stock moves below 170, which is where it formed this double bottom pattern here, so 2 times buyers came down to this level and they decided that they want to buy at that level. So if they come down to this point and let go and they drop below 170, then we can see a quick gap fill back down towards 167, and a break below 167 has a price target of around 164 to 165. Now let's move on to our next stock, which is going to be NVDA. Now NVIDIA is dominating the market right now. Obviously, short sellers are running for the door and buyers are entering the door, even though the stock is completely overvalued. Greed is coming in, and don't bet against a very strong uptrend, no matter how overbought or how overvalued you think it is. So in the short run, NVIDIA is still very much bullish. In the future, it will very much need correcting back down because it is trading at a very high valuation that is not very suitable for its actual number. So NVIDIA is at an all-time high, which means that the next breakout it has will be a blue sky breakout. The resistance we're focused on is going to be 399.50, and the way we got that number is we looked at the highest point it reached on its breakout after earnings, and that will become the resistance point because this is the point in which buyers said that they're not willing to pay above. So if buyers do come in this week and they decide to take the stock above 399.50, it is a blue sky breakout, so that means there are no past resistance points to focus on that we can establish price targets. So the way we establish price targets here is we would have a preliminary price target, but we will judge the stock based on its formation. So if the stock breaks above 399.50 and volume and relative strength are lacking, then the breakout is likely to fail, therefore we will close the setup. But if it breaks above it with strong volume and strong relative strength on the RSI, that means we will continue holding our position with a stop loss just below the breakout point. Technically though, NVIDIA is still considered bullish as long as it holds above 375. So if you're looking for entry on the stock and you want a stop loss, you can enter anywhere above 375 and use a stop loss below that point. But if NVIDIA moves below 366, which is going to be the lowest point it reached after the earnings day, and bounced back up strongly, so if it breaks below that level, that means the buyers that held it back up are starting to let go, and then we would short the stock or play puts on the stock down to a price target of around 350 to 355. The next stock on our watch list is going to be Netflix. Now Netflix for the second time this month has enjoyed a double-digit gain rally in just a single day, which is a phenomenal move. We can see that 2 times this month the stock jumped and moved up nearly vertically, and Friday it moved to a high of 383.75, which makes that our first resistance and focus coming into this week. So if the stock can break above that level, then we have our next price target set at between 396 to 398. Now remember, this is a pretty aggressive price target, and considering Friday's move was nearly vertical, Netflix may need to pull back and consolidate before it can reach that level. So we have some pullback levels for you here at 367, which would be the first pullback level. Now we wouldn't want Netflix to break below that level because then it would enter some kind of danger zone where buyers may get a little nervous. If it breaks below 356, then we would switch into a short or a put position mind state, and we would short the stock down towards a price target of around 340 to 344. But if Netflix can continue holding 367, this would be a very attractive buy-in point with a stop loss just below the support, and we would ride it back up towards this price target, and this being the second price target. When Netflix rallies, it rallies aggressively. Therefore, our price targets are also aggressive. The next stock on our watch list is going to be Amazon. Now, Amazon, just like other tech stock, has enjoyed a very strong upside rally. In fact, its daily is looking like it's wanting to reach more, with Friday's volume being extremely high. You can see it was higher than most of the recent weeks. So with that being said, these are the levels that we're focused on when it comes to Amazon. For the next breakout level, we want Amazon to move above the resistance of 121.50 to a price target of around 123. Now notice our price target is not too aggressive, and that's because Friday's rally, just like other stocks, was very vertical and it did not see much consolidation. So our price target to start off is going to be right around 123. If it reaches that level and starts pulling back, it wouldn't be surprising to see Amazon pull all the way back towards 117 to 118 before bottoming out and starting to try to move back up again. But if Amazon moves below 113, that's when it can get in trouble and buyers can get very nervous, and we would short it or play puts back down towards 109 and even 106. But as long as it's kind of holding 117 or 118, that is a good level to be at and a good level for entry. When it moves to 113, that's when you should start getting a little worried. Last but not least, the final stock on our watch list is going to be Tesla. Like most other stocks we've already mentioned, Friday's rally was nearly vertical. We do like the fact that the stock came down to 180 to 192, tested the support and bounced. So going into this week, here are some levels to focus on. 191.80 would be the first support to focus on. Notice why is because the stock came down to 191.80 and bounced here. So that bounce indicates that buyers came in at this level. So we need to establish a support point there. If the stock moves below that level, then it can easily move towards 184 to 186 because that was where it started the day, and all the buyers on Friday may just let it go if it moves below 191.80. But we are focused more on the upside for Tesla, so here are the resistance points that we need to break out of. The first resistance point is going to be 198.60, but remember 200 is a strong psychological resistance for traders in general. So the stock will need a big breakout above 200 accompanied with strong volume, just like the volume we saw on Friday. So if the stock can move above that level, we have our first price target of around 208 and our second price target around 212. But if Tesla fails and it moves below 184, then we have a downside price target of around 178 to 180. Below 178, it can rapidly fall to 170. So we hope you guys enjoyed this video. Don't forget to subscribe and